All right, traders, good afternoon here. It's good to be with you. We're back again, round three for the day. Ashley Reeve here. Let's make sure we are clear on the information we will be discussing here in this video. It's opinion, ladies and gentlemen, and should not be construed as advice in any way. Once again, a blessing. It's really a privilege to be with you guys here as always. This is our third trading room for the day, and we're doing phenomenally. We've had perhaps a little bit of gains, so to speak, from the charts, but it's pretty quiet Monday here. Not really much going on apart from those small little movements. And whilst we're busy, I'll just chat you guys up a little bit about what it means to really diversify a little bit there. And we'll be continuing some of that as we do go along. Remember, we were chatting about the NAS 100, we were chatting about the Euro USD, we were chatting about the gold, we were chatting about the Brent price there. I see you there, Brett, I see you, Petunia, I see you there as well. Good afternoon. And yes, please let us know, guys, all right, how you are feeling today with your trades. Are you set? Is your setups there? Have you had a productive one so far? All right. So let's get into the diverse ways in which we are looking at this, all right? But let's just quickly, just so that the guys can maybe check this out when they come back, tomorrow or even later today. What is portfolio diversification? All right, it simply just means you are looking to spread your capital across different asset classes. And these different asset classes don't necessarily move in the same direction. What this does is it reduces the impact of one bad trade on or the 1 week market, basically. All right, so you can quickly reduce the risk by diversifying your portfolio. So think of it like perhaps a sports team. You don't want 11 goalkeepers, you want different players with different strengths. And what that helps you do is it helps you spread out. All right. I see Pete there. Jace looking cozy. Yeah. Look, man, the scarf is there, Jace. The scarf is there. Pete, I see Monday trading room. Any changes? Because I want to know is we have trading. Oh, yes. All right. So Pete, maybe I think that's a very good question. All right. So Pete, along with some of the other guys there, we're running 4 trading rooms Monday to Friday. We've decided to, start producing a little bit more there for our students. We are walking with them. This is a journey at the end of the day, all right? And one of the things that we have identified over these last 3 years, and we needed that data. We needed 3 years. We thought it may come a little bit later, but we have seen that there's many traders, they are trading by themselves, and there's many things that they actually run into that puts them in a very, very dangerous position. Some of that dangers is confusion. Some of those dangers is uncertainty. And so we're here to walk with our guys every day, 4 times a day in specificity, Monday to Friday. We've been checking out 4 assets today. And we are really, really looking to get the guys to understand why certain decisions are made. Now, Pete, I see you asked that question. Not just Tuesdays and Thursdays. That's exactly why. Let's say there is an opportunity that comes today, and we take the opportunity, so we have some action, but you'll only get to hear about it tomorrow, which is Tuesday. All right. So at this point in time, we have decided, listen, if there's action today, we want to watch and walk with the guys moving forward. All right. So I hope that is some context there. And then we will obviously update you with some more of the information that comes along. Right. For now, just dig into our 4 trading rooms: 9:30, 12 o'clock, 3 o'clock, and 6 o'clock. All right. Jace, phase 1 started? Not yet, my friend. You get that email there. Phase 1 is not started. Just for the guys to know, phase 1 is a competency test that we will definitely give to all our students. Guys, believe us, you guys are at the right place, you with the right people, and it's absolutely fantastic. All right. Tabatso, I'm happy for these changes. All right. Chris Uzati didn't really care. Yeah. Tabatso, that's absolutely true. Isabel, I'm not sure what that means there, Isabel. growth is subjective. So I would be very interested to know what that means. All right. It all depends on what you do with the information. So I would be happy to understand what that means. Okay. Jay's got it. All right. Brilliant. So, guys, let's get in. We were doing 4 today. We were looking at the NAS, the Euro USD, the gold price, and the oil price. I mentioned to you now that diversifying your portfolio, think of it as you cannot play with 11 strikers. You need different, guys that have different positions so you can obviously win, and score a goal. So as an example, you have Forex, your major pairs like the Euro USD, the GBP USD. We're looking at the Euro now. And the advantages then of trading FX, all right, would then be it's highly liquid, trades 24 hours during the week, lower spreads on the major pairs, plenty of opportunities every day. And that's why I divided the short term from medium. This white block here represents short-term trading versus this one that represents medium-term. Blind spots, when you're looking at Forex as an example there, guys, many pairs are highly correlated, all right? So if you trade USD Swiss franc, you're going to find something with USD JPY as well. You're going to find something with USD CAD as well, all right? Then you'll also find GBP USD, Euro USD, NZD USD, AUD USD. So they're highly correlated. So you may not want to choose 3 or 4 of major pairs and then miss the correlation. Instead, you'd maybe want to diversify the Forex with indices. All right, example, the US 30, the NAS 100, the S&P 500, they have exposure to the entire economies instead of one company. This is an index now, right? Less affected by individual company news like your single stocks. Strong long-term trends, guys. And the blind spots here, indices can become highly correlated during market panic. So if the US market crashes, when I say crashes, I'm not referring to dead crash. I'm just saying tanks. Several global indices can fall together. And if you have FX and you have an indice on the other side, you can diversify very nicely. All right. So please make sure that you understand that moving forward. All right. And then also, guys, maybe just to, as we're going in, I'm going to give you some advantages of it, some blind spots to actually watch out for, because this is what it's going to help you with. All of this is going to help. All right. So our gold pounds in the area you talked about earlier. Yes, Jay. So let's see now. Let's go back. Let's start with the Euro USD. Let's start with the Euro USD. All right, guys, what did we decide here? All right, we decided we are looking at the short-term structural development here. That was on the 5th. That's the 15-minute structure right there. What did we say? There's a high and a higher high there. Not this. This is a substructure inside that high and that high there. Substructure, we're not interested in that. Please forget about that. That doesn't mean anything. All right. It's this high, that's giving us the bullish bias on the minute frames. Now, the hourly frames has not reacted in this area yet. Like I said, it is a very, very slow and quiet Monday. So we've not seen any developments in this area yet. We need to wait for that. Now, you can trade if you'd like. We won't stand in that way. Are we together, guys? We can't stand in your way and say don't trade. It's your trading account, it's your money, it's the risk you're willing to take. But we've put together the academy here as TD Markets so that we can give an educational experience to say, listen, we understand that people want to trade, but let's make smart moves here, right? So how can we go ahead of the markets when the market has not given us anything yet? Yeah, that's like asking for trouble. So patience needs to be executed. So we wait. Euro USD, nothing there yet. Remember, Euro can be heavily moved or it can react to what? FOMC. Watch the FOMC. It's coming. I believe it's Wednesday or Thursday. We want to see what's happening with the interest rates. All right. Don't worry. We'll be tracking that with you on the day before the FOMC and on the day of the FOMC. Remember, we have an evening trading room as well at 6 o'clock. So we'll be able to give you some fantastic guidance there. Okay. We're not doing anything here, guys. It's nothing we can do right now. We'll be checking this out at 6 o'clock again. And once again, look at the advantage. We'll be checking it out at 6 again. Now, the gold price is what we looked at. And check this out. I did not enter here. Ash, why? Why did you not enter? You said that you're going to enter after the 15-minute candle. Yes, I did. This 15-minute candle, look at the body. Majority of the body is inside of this area. That's the reason why I did not enter. I want the candle language to read as follows. I would like the body, if it was this long, like this, but I want maybe a quarter to be on top, and I'd like the majority of the 3/4 to be at the bottom, because that tells me that there is a lot of momentum. Now, how can I just say something like that? Because, guys, look at this. It's pretty obvious. Look at this candle here. A quarter of it, maybe less than a quarter, is above, and the rest is beneath. And look, it went further down. The same happened here. Look at the candle language. A little bit of a tip there, and then the rest down. Look at this one here. Majority was up or on top, only a little bit of a quarter there at the bottom, and price retraced. I hope you guys are catching that one. Chase, I hope you're there. Remember, Chase, the teaching was the moment price comes out and goes back immediately there. Yes. All right. In this specific case, I isolated the candle body language, but you're not far. You're not off track, my friend. You're not off track there. All right. So in this specific case, I've isolated the candle body language. All right. And this you can always go and check out, guys. Hear me today. Go and back test that. The size of the candle through a level and where the body is. Now, they don't say those things necessarily. Are we together? But that's the intricate part of it, of that body. All right. That's why I didn't enter. So I'm still waiting for a candle that is believable. It must convince me. Yes. It must convince me that price is willing to go to the bottom. So Ash has not gone into gold. I'm going to say this again. That's the minute structure of a correction that we saw happening here. There is divergence here, yes, going to the upside. Remember, that was the impulse. This is the correction. We are possibly trading what? The correction down. Listen to my words. Possibly. I did not confirm and said we are, because we need the data to align. Make a note of that if you are able to. Make sure your data aligns. So if we get a proper close beneath here, then we are trading the correction deeper. All right. Now, remember, with the, I believe it was the oil price, I gave you guys the surface, the shallow, the deep correction, the sharp correction, and then the deep one, right? This over here, if you take a Fibonacci retracement tool, and by the way, guys, we'll be doing a lot of tools here in these trading sessions. We got 4 a day. So you guys will be learning quite a bit, all right? You won't just be learning RSI or stochastic. No, we'll be looking at the Gantt charts, the Fibonacci fans. Guys, will be really pushing quite a bit. And there'll be other indicators, because I know there's a lot of traders, they like using indicators. I'm not against it, but, what we do teach a lot is market structure. All right, we thrive on market structure. You can use all of these tools on the market structures. Nothing wrong with that. And we'll be doing quite a bit of that, okay? So here is the fib, and I've extended the fib to the high over there. Now, look, we have gone into the 23.6. That is the shallow, or a surface correction. The 38 is the shallow. The 50% is the sharp correction, and the 61.8 is the deep correction, okay? Right now, we are at the surface. We are at the surface. Now, surface meaning we've not gone even into the shallow yet. Price has not given us the signal. So if we do trade here, you can see where the 61 is. That would be a deep correction that we're still trading in this white block here. I'm not going to be moving out of the white block at this point in time. I'm staying in the white block. Unless price decides to go up, break above there, break this entire area, create a higher high, then we're obviously pushing further up. But we'll deal with that and cross that bridge when we get there. For now, this is where we are at. I'm not touching it. I'm waiting for it. All right. And you can see that it's like it wants to do something, So we are in here now. It's 15 after 15. And we will be in here as the US Open starts. So we'll see if there's any pressure. Now, like I said to you, I'll be, as I'm going, I'm bouncing around here. I'm looking at charts, but I'm also giving you some great content in terms of teaching, all right? When you look at the advantages of diversification, I started that off. Number one, it can reduce a lot of overall risk, all right? If one market performs poorly, another may perform very well. Now, we're streaming live. This means that it's obviously not recorded right now, but it will be. So if you need this information later on, you can always go, all right? So you can reduce your overall risk. If one market trades poorly, another may perform very well, all right? Stocks can fall, that means gold rises, and your portfolio really has losses that's less overall, all right? Number two, you find that you have a lot of more trading opportunities. So instead of waiting for one market, your Forex may trend, gold may range, but then the indices may break out. Listen to that. I'm going to say it again. More trading opportunities. One, what if your Forex actually trends up? Your gold is ranging at that moment. So it doesn't matter. Even if Forex, is trending, there's nothing you can do with gold. It is busy ranging. But then the NAS 100 breaks out. All right. So you always have something worth trading. And fortunately for you at TD, we've got a substantial amount of instruments. All right. Number three, and I'll stop there and then I'll go to the next asset. Number three, you have a smoother equity curve. All right. So instead of experiencing 10% gain or minus 15% or plus 8% or minus 12%, you may experience a 4% gain now, and then you get a consistent 3 there, then you get a 2, then you get a 5. So you'll be experiencing incremental growth, but it's less emotional stress. Just imagine you have 10 standard lots on gold, and then you have 5 standard lots on Forex, and they're not even moving in the way that you had predicted because the market is just not conditioned at that moment. You put yourself under a lot of emotional stress, and that's where you start to make silly mistakes. All right, so be careful of that. I'll give you a few more as we do go along, but I think for now, let's quickly head over to the NAS 100. And you can see here, the NAS has now broken above there, all right, but immediately we have a rejection. Look at that. If I go to the 20 or the 30 minute and even the 1 hour, Chase, look at that, out and back in again. Now, you know how this can confuse people? Because you have charts going up and then immediately coming down. So what we'll have to do here, we're going to have to find the strength of the RSI in this section over here. So remember, get your RSI going. What is the continuation level? 55. 55 is the continuation level. Now look what price has done. We've broken out there. We've broken out here, but it's lower. See, it's lower. So there's no strength in that break. That can confuse people. But Ash, it broke out. Yeah, but there's no strength in it. You see that? Yeah, but Ash, I want to enter now. Okay, but if you enter, you're entering into a rejected state. Are you sure you want to enter into a rejected zone? Ask yourself the question. So we're going to have to then look for an area where the data window is giving us a specific zone. That's 69 right there. There's 69, 69.74, 69.79. So this becomes this is a very important candle right here. That's a very important candle. All right. So let me place an area there. Remember what Ash is looking for. What Ash is looking for is that candle. It is the body of the candle. Do you see that? If the candle body is not as massive, I mean, look at this. We come up, we break, but it's in alignment with that rejection there. You see that? Right there is an alignment that area. So it's not cleared it. Why would you get into a buy there? It's not cleared it. So these are the small things that you need to be looking at, all right? You need to be looking at it. So I'm going to be waiting for price to give me a proper candle body above 29,799. If it can do that, then it's beautiful for us to start, looking at some action over here. However, we get the opposite run. We need the candle body to close beneath there. Very strong, like I just explained. Then obviously this white block here, we then push to the downside. Now you can see why I'm not even taking that. This is consolidating. Why would I take this trade here? All right, that's very, very important. All right, so that's the NAS. Nothing yet. It's 15:21. We got a couple of minutes left before 3:30 hits us, the US Open. So we'll be able to see then if there's any strength or not in this chart. So let's loop back again, Euro USD. And Euro USD, look at that. Look where it is. Now, for all the guys that would like to get some action, I've now gone into a 5-minute. So for the purposes of the guys that would like some action, all right, I'm going to be showing you something here, and you'll choose if you'd like to. Now, there might be some action from there to there on a 5-minute, okay? So let's go and see if there's anything here. If the US opens and the Euro strengthens here from a correction perspective, because it was a high, and then we came to the low, and then we want to see how far it could possibly go, all right? Is there a continuation here? We don't know yet. It's still stuck and coming back into the channel. And I would just want to find the highest place. You see this area there? Let me see if I can find it. You see the zone here, right there? That area is very important. Let me show you. Look, that is at the 70 point right there, this zone. So I'm going to find the candle that's there. All right, let's do this. There. And I'm going to find the candle that represents that area there. Let's see. See this candle, this one? They close at 75. Oh man, that's brilliant. So here we go. There's my level. From there, look what happened. From there, price came all the way down. That was the highest point. Overbought. From there, price came down, 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 losing momentum. And only now, because we came back in, that is our key area to say, listen, there might be some upside here. So we're not going to be trading it now because price has only created a high. Look, there is divergence right there. All right. So I'm not going to be taking anything at this moment in time. What I will be waiting for, though, let me just take this off so that you can see. What I am going to be waiting for now is for price to break above that area. That zone becomes a risk zone. And I'll tell you why. If price breaks above this area, okay, that's a high. This is a higher high. That higher high would be an entry that guys get into. The second entry that guys will get into is above there, because above there is a second higher high. A third one, sorry. All right. So that becomes the first entry for many people, and the rest of the guys will enter after the trend line has been broken. So this is the first high, higher high, higher high. So why is this risky? Because price can create a high here. Okay. Then what it can do is, let me actually just show you. Price can come and create a high, higher high, and then reject and come all the way down. Because remember, the daily has given us a lower low here. Look how I'm tracking that structure. Okay. Lower low on the daily. So this could just give us one high, another higher high, and then it comes back down. So we'd have to wait for the next one here to give us a stronger follow through. That's why I'm saying this is a higher risk than that one over there. So again, it's subjective where you're going to enter. I can't tell you that you need to enter there. I can guarantee you there are traders that says, Ash, you know what? I hear you and I agree with one. I agree with one. Okay, that's clear to me. I've been watching the charts. because it's closed above there, it's break of structure. Other guys will say, no, Ash, 2 is from me. I think that works out better for me. And again, we are not taking sides to who is right. We are on the side of, do you have the direction? Okay, if you have the direction, then you're right. Not about where you took the entry. If you are in the trade and you are in the right direction and price is moving in that specific direction, then you are right according to us. All right. So that's the Euro USD. NAS, I think we are okay with this now. There's the gold price. You can see it still hasn't moved here. And then obviously we want to check out the oil price. Now, remember I said I'll be giving you guys some more, information as we go along. Here's a fourth advantage for diversification. There's less dependence on one economy. So instead of relying only on the US dollar, the US economy, you can also gain exposure to Europe. You can gain exposure to Japan, to Australia, to global commodities. You can gain exposure to international companies. The next advantage there is you can have better capital allocation. All right. Different markets suit different strategies. That's why we don't actually, this is a very good time for me to mention this. We get a lot of traders that will come and say, so what strategy do you use? Now, that's exactly why we don't teach a specific strategy. We teach people how to create a strategy. All right. And if you only have one strategy, one arrow in your quiver, then that's all you're using. But we're saying, guys, let's become smarter. Use different strategies, all right, for different commodities, for different assets. Now, when I say different strategies, I'm saying to you that Forex, as an example, all right, respects support and resistance levels. High, it has a lot of respect. The time when it looks like it may be not respecting it, it's probably due to fundamentals. But technically, it's extremely fluid in terms of where it stops, where it rejects, etc., etc. Versus commodities doesn't have respect for those zones. It will break those zones and then go in the direction that you had wanted. So your strategy in terms of where you enter will be different for Forex versus commodities. I'll say that again. Your strategy to enter could possibly be different for Forex versus your commodities. You may analyze them the same, look for direction, look for key areas, but your entry may possibly be different. So as an example, you can look at Forex. A lot of short-term trading can be done there, guys. A lot of short-term trading can be done. You're looking at minute frames. I mean, look at that Euro USD that we are looking at now. All right, look at that Euro USD. We're looking at possibly entering for roughly about 29 to 30 pips here. Okay. Then you look at indices. If you swing trade indices, it's fantastic because indices has the proclivity to trend a lot. So if you swing it from a low to a high or from a high to a low, you can really make some good money. All right. Then you look at stocks. That's more long term. You're leaving it to run a little bit. I mean, I'm in a NVIDIA trade. I'm still in a NVIDIA trade. I know some of the guys will relate with this. Where's Jason? I don't know if Brett, if you check this out, but I've been in NVIDIA for some time, still waiting for it to go up. All right. But it has all the makings of pushing up very nicely. It is a very strong stock. And we still see the upside. It's just taking a bit of time to get there. But what's important is the type of entries and how you go about analyzing, all right, could be just a little bit different. But that's the beauty about diversifying. And then lastly, maybe if you're looking at commodities, there's a lot of emphasis on interest rates and inflation. Okay, so make sure that when you're dealing with that, you are watching those reports, those levels very closely, because the moment they move, they affect. Okay, so 1530, it's now. It's just hit 1530. Let's see what happens with these guys. So NAS 100, nothing right now. It's US Open. Nothing crazy at this point in time. There is obviously reaction. Okay, there's reaction with the US Open. Remember 29,799. Okay, 29,799. Euro USD, nothing here. Gold, nothing there. And then the oil price. Look at this oil price here. I'm waiting for the 4 hour. At 4 p.m. today, if it closes, and this is a beautiful trade because look at the candle body. A quarter is at the bottom, majority is at the top. So if it closes like this, Pezul. All right. So I'm waiting for that. Now I'm going to wait. So at 4 p.m., obviously we're going to close the trading room at 4, but we'll be back at 6. So I'll just give you the commentary before the trading room closes so that you know at 6 o'clock when you join me, you would have seen what I would have done here. All right. So nothing yet. NAS is still just reacting at that zone. Very happy I never went into this one yet. Euro USD, nothing here yet. The gold price, nothing there yet. And the oil price, we're not seeing anything really move right now. Give it a bit of time because obviously the Tokyo session closed long ago. The London and the New York have obviously overlapped with the US now being open. But I want to maybe just mention a couple of things regarding some of the blind spots in diversification. You will run into false diversification. And this is one of the most common mistakes, all right? Example, a trader buys Euro USD, buys GBP USD, AUD USD, and NZD USD. Now, it looks like 4 trades, all right? But in reality, it's mostly one big bet against the dollar. I want you to think about that. Think about what I just said there, all right? You are buying, all right? Listen to this. You are buying. Hold on for me, guys. Can you guys hear me well? Can you guys hear me well? Can you guys hear me here well? Maybe just let me know there very quickly just before I continue here. All right, brilliant. All right, so think about this for a second, all right? So you buy Euro USD, you buy GBP USD, you buy AUD USD, you buy NZD USD. Those are major pairs, great pairs to trade. All right. Okay. Thanks there, Brett. It looks like 4 trades. It looks like 4 trades. Listen very carefully. But in reality, it's like you saying, listen here, I'm making one big move against the dollar. Now, there's a correlation risk there. All right. Because some markets, they move together, and like example, gold and silver, NAS 100 and S&P 500, Euro USD and GBP USD. If one loses, the others may also lose. Listen to what Ash just said there. So if you have 4 trades in, and let's just say something happens, and you start seeing the Euro USD pushing down. Now, I can say this to you because last week I did exactly that. Got in with the GBP USD, got in with the AUD USD, all right? GBP USD went up. It hit the areas, it went to the zones that I wanted it to go. And then the NFP was negative for the US. And then later on in the day, it just stopped moving. The AUD USD, I got out, all right, because it just wasn't moving. And lo and behold, we come back Monday, there's just not enough movement there. So getting out on the Friday was the best decision I made. And I was only in 2. I did not get into the NZD USD. I did not get into the others because I understood that too many positions, if the one is going down and I'm holding on, the other 3 may also go down. You don't want that. So owning 30 trades isn't diversification. Listen to what Ash just said there. Owning 30 trades or having 30 positions in is not diversification. It's often just harder to manage. It's more expensive due to the spreads and the swaps. It's mentally exhausting. So quality beats quantity here, guys. Quality beats quantity. I mean, just look at this oil price now here. Shearer, I know that we've been in lots of cahoots with the oil price, right? Not just this year, my friend, but for years we've been coming along now with this oil price, right, Shira? I hope you're still on there. And look at this oil price. So a quarter of the candle is below 71, and look at the rejection. Now, why would I get into this trade at 4 p.m.? Why would I get into this trade? Now look at the question that I'm asking myself live with you guys. This is exactly the concept, right, Sandile? And I see your comment there. During the times of the major, yes, this is exactly why we designed it this way, because I'm asking myself, why would I get into this? So I can guarantee you there are other traders that's asking the same question. So we're walking together, right? We would have to wait for a more convincing candle. Look at this here. We have majority of the candle beneath $71 a barrel and only a little bit there. Do you see that? So even this price here, don't let this fool you. All right, look at this, majority above, and then we start seeing the rejection, and then boom, up. Do you see that? So people see this candle and they're like, oh yes, I'm selling. But then their position is they're selling, but then look, it reverses up. So you need a convincing candle above your area. All right, so please, guys, understand, diversifying, it's about quality. And the stuff that I'm speaking about now, this is all about quality. And you can see it here. Look at this. Candle at the bottom went up very nicely and then rejects. And then the next one is so uncertain. Long wick to the upside, long wick to the downside, and just nothing after that. The other thing about over diversification is you owning a little of everything. All right, it can reduce your returns, because sometimes your winning trades barely move your overall portfolio because your capital is spread too thin. So these are the kind of things that people do not chat about, guys. Please hear me today. They don't chat about it. All right. Most of the time, we're just going to get, buys and sells, and if it breaks there and so forth. No, we have to do this thing professionally. All right. Do it properly. And that just means with experience. Do it with experience. Do it with a back-tested, approach. Don't look at a specific way a person trades, and then you're like, I'm going to adopt it as well. It doesn't work like that. All right. That's a very, very important point there. All right. All respects, no one. I almost got in early on what looked like a Listen, that's absolutely true. That's absolutely true. There's no respect whatsoever. It does what it wants to do. All right. So let's loop back quickly here, guys. NAS 100, look at this. Do you see why I never got into that? Look at that. Do you see why I never got into that price there? Do you see that, Jace? If you look at the candles, there's just it's just not convincing. Now imagine you bought there. Imagine you bought right there. The trouble you'll be in. All right, Euro USD, still standing still here. I still think the FOMC here is going to make quite a bit of a change. Gold, nothing here yet, and obviously the oil. So guys, we're really just still standing still at this point in time. There's nothing really that we can do. But again, I'm going to loop back and I'm going to give you guys some commentary on what I'm going to be looking at, because the next trading room we have at 6, if I'm in a trade, if I've taken action, it would be because of what I'm going to share now. Okay, it's going to be because of what I shared now. And that is part of why our 4 rolling trading rooms is so great, because even if I'm not on the trading room and there's the break between the 3rd and the 4th, you still have access to the information. Now, you can choose to analyze, and you can choose to, agree or disagree. We encourage you to take the information, go and take it, analyze it for yourself, and say, listen, I agree, or I don't agree. We would like both sides. All right. Any person that's afraid of scrutiny, and scrutiny is not necessarily negative. It's just separating differences. So if someone gives any form of critique, we're not referring to disrespect. We're saying if someone gives critique, it simply means they are separating what they see, what they don't see. If you can take it like that, you are okay. All right? There's a fine line between what is respect and disrespect. We don't tolerate disrespect, yes, but we welcome scrutiny, or for someone to be critical. All right, be critical. There's nothing wrong with it. That's one of the challenges we have in leadership. All right, people are afraid to be critiqued. If they just understand that it's good if it's respected, it's not abuse. Okay, so one more thing here, just before I give you some commentary on what I would like to see, is ignoring your position sizing. All right, in diversification. When you are diverse in your portfolio, it doesn't mean that you are replacing your risk management. Okay, doesn't mean that. For example, you're gonna find your gold. You have 10 lots on gold, and then Euro USD, you have 10 mini lots, 0.10. Your portfolio in that case is heavily dependent on gold. So position matters as much as the number of assets. All right, that's important, guys. If you have 10 standard lots on gold, your account is doing this. All right, it's doing this. The one side is sagging down, and you have this Euro USD that only has 10 mini lots. It's fractions of the standard lot. So you don't want to be doing improper position sizing. That is a key point right there, and I hope you guys are hearing us on that one. All right, that is on ignoring position sizing. So we also can't omit this, that one event can affect everything. One event can affect everything. All right, major events like interest rates, inflation reports, employment data, geopolitical conflicts, they can impact currency, stocks, indices, and commodities simultaneously. So one way to mitigate that risk is don't trade when there's high impact happening right there. You can wait for it to settle. All right. Myself and T, always when we come on for our NFP and CPI, you'll notice, all right, that we will wait for the data to come out. There's people that blow accounts before the data even comes out because of the wrong direction. So diversification reduces risk, but it doesn't eliminate systemic market risk. And that's very important for us to notice. All right, I hope that makes quite a bit of sense. All right, so let's quickly look back here to some commentary on what I would like to see. All right, from a NAS perspective, like I said, I'd like to see it either break above 29,799 or below 29,462. Any of that happens, all right, that would be an action from my side. Okay, Euro USD, I'm going to be waiting for number 2. I'm not going to be doing number 1. I'm going to be doing number 2. All right, number 2. The reason why I'm going to be doing number 2, while I'll be doing number 2, is because the gold, the daily frame has given us substantial movement here. All right, to the downside. So I'm going to be waiting for number 2 because I want to mitigate the risk. All right. With the gold price, like I said to you guys, the 15-minute to the downside must be a substantial candle. Great body language. Excuse the pun or the play on word there. Great body language. I want to read the body language. Make sure that I have a convincing candle, more than convincing actually. All right. And then I will take this correction here a little bit deeper. But if not, waiting for the break above, and I'm only trading, place emphasis, this white structure and this gray structure. I'm not anywhere else. If I switch on a daily or weekly frame, I want you to look at the emphasis. Ash is not trading it till there. That's $4,887 per ounce. Why would I trade that in a scalp? That is holding the trade on higher time frames. It's a daily, weekly frame. That's holding gold. So you can hold it if you want to swing, or you can scale it a little bit every day, because remember, this is, at this point in time, is very bearish still. This correction is still very bearish. So if you're trying to trade all the way up until there, price might not make it. So I'm waiting, and I'm only trading this area right there. That's pretty straightforward. And then the oil price, I'm waiting for price to break above that area so I can possibly take it into the to the surface zone, surface area of the Fibonacci retracement. Here we have seen that prices come down considerably. We are back at end of February, beginning of March, just before the Strait of Hormuz was closed, and I'm waiting for possible correction here now. Ash is not saying we're going to hit the 90s. Nope, we're still in the 70s. I'm still in the 70s. That's pretty straightforward there. All right, so let's see what happens. Let's see how this goes. Let's give the US a little bit of time to fire on all cylinders, and just make sure that by 6 we would have gotten some fantastic movement. It's literally just the start of the US Open here. So in the next hour and a half, we're going to be waiting for some good movement there, and at 6 o'clock we'll come together again. Guys, I'm not doing 10-15 assets all at once. All right, it's quality over quantity. It's quality over quantity. We can analyze the whole day, but to what point, to what end are we analyzing? If I finish the stream, will you understand? Will you still be with me? Will it be systematic? Will you be able to take action? That's the questions that myself and T ask. We don't come on just to analyze. It's easy to do that. We can read the news. It's easy to do that. But when you walk away here and you come back at 6, are you and are we on the same page? That is more important, because if that's the case, guess what? The trading community gets stronger. All right. So what are we watching? We're watching NAS. We're watching Euro USD, we're watching the gold price, and we're watching the oil price. Look at the NAS now, strengthening a little bit here, 29,799. That is what I'm looking for, all right? And I'm going to be looking for a strong candle to the upside, strong body to the upside. See this one here, why it's going up? Strong body, weak here at the bottom and strong at the bottom. On top. This one is strong at the top and weak at the bottom. So pay attention to that detail there. It's going to get you out of a lot of trouble moving forward. Okay, so watch it. Let's see it. Remember, guys, you can, if you've not opened an account with us, if you're here for the first time, we have our links in the chat facility. It should be above there. Make sure you open that account. Make sure you pay attention to the contract size of your account. Do you have 1,000 unit contract size, 10,000 or 100,000? These are also important things to note when you're trading. All right, it has a direct impact on the amount of lot sizes that you're going to be using. There's leverage there that you must consider, because you cannot make the same amount of money on 1,000 contract size versus 100,000 contract size. It's not the same thing. The margin requirements is going to be different, and especially if you're using higher leverage or lower leverage, it affects it. All right, so please, my good people, understand that you are at the right place, and we'll be sharing more of that as we do go along. So I'll see you guys at 6 o'clock, NAS 100, Euro USD, gold, and the oil price. All right, have a lekker one. All right, I'll see you guys at 6 o'clock for our fourth and final trading room for the day. And then what's fantastic is tomorrow morning, 9:30, the earliest that we can at that point in time, get to the guys, and we continue from there. All right, if you're here for the first time, thanks for tuning in. And if you're one of our regular family members, well done, guys. Well done. See you guys soon. Ciao.